Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Tuesday, May 2nd, 2023. Wild? Yes. Woolly? Yes. Crazy? Yes. Unforeseen? Basically. And in all my years that I've now been trading the futures markets, the JOLTS, which is, a preview for jobs data, has never had the reaction that it did today. And normally, for those that may use Econoday puts a color code on it, and it's usually been green, which means not necessarily a market mover. And if it's red, market mover. But it's always been green. Today, it was red. And it moved. And it started right at 7 or 10 o'clock Eastern when that number came out. And it was fairly interesting to watch this all happen because everything kind of went all at the same time. The bond market reversed, the equity markets reversed, gold shot higher. So it was this mass of dumping all the, putting all the dumping positions back into flight to quality type things, flight to safety type moves, where we saw the bonds, we saw gold, and they held on to those gains all day long. They held on to them. There was no turning back. The equity markets, however, did decide at one point, it's like, oh, let's start buying it back. Let's just go. So there's still all of this junk surrounding how we trade, surrounding what we do. But now let's just take a look at the review of the Elliott. And we're going to start here in the NASDAQ. I'm starting on the 4-hour chart. I think it's important to realize that when we're building on an ABC, we had our levels, but more importantly on structure. You hear me talk about structures being the most important, and it remains the most important. That I had my A wave, I had my B wave, and we were looking for a 5-wave C. And we had 1, 2, 3, 4. We're looking for 5 up to complete minor 5, and in turn, the intermediate C wave, and in turn, the primary B wave. I've left the primary B wave off, and I'm going to get into that in a moment. But the structure itself is appearing quite complete because we have where wave C obviously did go above A, but I was looking here that I needed this wave 5 to put in a new high above wave 3, and it did. Not by a lot, but it did put in a new high. So those all match up. Now, I want to drop down to the hourly chart, because here we are, coming up. Now, yesterday, I had put the 3 up here, and I was expecting just a 4, and the 4 would have really just put in a little bit lower than that, and then we'll be fine. But no, it didn't do it. It kind of started to come down. The opening, they bought it. I thought, okay, maybe that's the completion point. This was a kind of like an extreme, a tail. So this would have put in a new low above that if I did it on a close basis. And then we're starting to move back up, and now we're going to go up towards 13,400. So in any case, no. Then that number came out, and it would have been right here. And it just kind of went bob, boom. Now, how do we want to count this just coming into tomorrow? If I'm going to put the 5 there, then it's going to be 1, 2. All right, so let's start even if we're doing minute. Minute 1, minute 2. Now we're into minute 3. It should form its own 5. So wave 1 of 3, wave 2 of 3, 3 of 3, beautifully done, right? This just solid, straight, boom, get out of the way, drop. Exactly what you're looking for. Now, here's the gig. If this is going to be a 4, first of all, it cannot cross 13,267. Therefore, would be overlapping into 1. Cannot. That's the do not cross zone. If it's 4 of 3, and this whole thing is going to be 3. So what we're going to be looking for is for this wave to be wave 4, and we're going to come down, put in a new low below 13,110.25, and get this thing to put in at least wave 3. Okay, 1, 2, 3, 4, 5, wave 3, minute 3, a minute 4, a minute 5 to put in the first 5 waves down off of that high. Now, that's what I'm going to look for right now. How's it being left? Basically, A, B, 1, 2, 3. It's weird, but it's going to be like more of a 3 down, an ABC down. Huge as it is, what does that leave us? We cannot walk away and say, nah, no more upside. And as an analyst, I have to continue to include it. Whether I like it, whether I don't, whether it's whatever. So again, tomorrow, we've got some numbers coming out early. Then we're waiting for the Fed. Fed comes at 2 p.m. Eastern, 11 o'clock here on the Pacific Coast. Do or die time, folks. Do or die. Now, they're still rambling on about, well, the Fed's going to pause, the Fed's going to cut, the Fed's going to do this, the Fed's going to do that. But yet today, we're hearing more about the Fed's going to raise twice more, at least. Now, that does the May and then the June, or maybe July, right? So this whole story, what else happened today? Which strengthened the people said the Fed can't. The Fed's got to help out the banking sector. No, actually, they don't. The banking sector, they just did. And when Silicon Valley went down and Key Signature Bank went down, and now First Republic went down, when Silicon Valley went down and Key Signature Bank went down, they put $440 billion into the system. Right, to help out those banks, to protect the depositors, et cetera, et cetera, et cetera. Guess what? Sloshing around inside the market is where that 440 ended up being. And it's still sloshing around inside the system. So we're supposed to now put more in to protect what else is coming on, because guess what? They went after, I don't know if any of you checked, let's just go over some of the facts that we saw today. KRE, which is S&P Series Trust, S&P Regular Banking ETF. Look at what they did today. Which bank was going to go down, right? As soon as that jobs numbers hit, as soon as something kind of went through, they took JP Morgan down 228. They took Goldman Sachs down $7. They took Bank of America down. They took Citicorp down. Then they started going after PNC Financial. Bam! Got right out of it. Then we have Zion. Bam! And now, but it bounced back. But they were whacking it, and then it bounced back. Likely because they put out their earnings. So we're seeing this, that the banking sector is not healthy. And to think that the Fed is going to step in to rescue all of these banks, least we forget, folks, there are $2.2 trillion of unrealized losses on the hook here from all of these banks that are walking into trouble. It's not, and well, I can't say that it's not the Fed's fault, because actually we go back far enough, they're the ones that started the problem. But these banks and their traders bought treasuries to hold to maturity to get 1.68, 1.7, 1.5, whatever the interest rates were. They were not expecting that it was going to go to 3.5 or 4. Right? So to consider that the Fed has got to ease off on it or actually start cutting, they can't cut enough that's going to erase $2.2 trillion. They cannot cut enough. So this concept about they've got to help out the banking sector is not going to fly. So now we got the Fed. What if they do? Are they being a little bit more hawkish? Are they being dovish? We're not really hearing a whole lot. So what's going to be important is I do expect at least an interest rate hike tomorrow. 25 basis points. That's what everybody's been expecting. 25 basis points. And then it's going to be the press conference. That'll be the kicker. So there'll be an initial response right off of that, not whatever the Fed's decision is. We know that's what algorithms do, and they set them up. So I'm expecting a big boo-hoo about it when it initially happens. Half hour later, 2:30, we get the press conference. Listen very carefully to what he says. He will set the tone, and the market will follow. That's going to be the more important moment. Now, how is it lining up? The market is not in good shape. It just isn't. We keep getting it. It keeps happening. First, we're going to hang our hat on the earnings. Then we had, Microsoft did great. Then we had Netflix did great. Then all these earnings reports. Then Amazon, so. Amazon rallied today. Doesn't make them any better, any worse. But Apple, they kept trying to push the stock above 170. Then what does it end up doing? Sliding back below. This is what it's like. You push against, you push against, you push against. You meet the resistance, they knock it back down. You push against, you push against, you push against. For whatever your reason is, because the Fed's going to help. The Fed's going to do this. It's like, no. What if they don't? What if the banking sector just starts to decay and faster? What if they keep hitting KRE? What if we start getting failure because it comes to light? What if PNC can't recover? PNC was in line to put in a bid to take over First Republic. I was like, oh, really? And then if you don't remember, on the day that the Fed, the FDIC was asking for the bids, somebody out there, I can't remember the firm, downgraded PNC. I was like, wow, okay. So a lot going on. And it's not spelling or rallying to new highs. But here's what I need to do. I need to leave open the potential. The wave pattern is incomplete at this stage. And if they turn it higher and start to move this all up again, and they cross back above 13,300, it's going to leave the door open for 13,400. And that's why I haven't put the wave B there. It all shifts back. And yep, I'd put the 3 there. And this is the nastiest, ugliest looking wave 4 in comparison to wave 2, much bigger, much deeper. This was an irregular. This was just a straight ABC. Possible? Yes. I cannot deny and say it isn't. Am I banking on it? No. Am I banking on additional downside? I'll wait and see. Remember, as I always say, I'm not walking around bearish or bullish. The market tells me. The market tells me each day. The trading tells me each day. This was very emotional. This was get out, get out, get out. All of this, overbought. All of this, too much premium. Too lofty. They cut it right back. Okay, till they got to a level where support would step in. Now, moving averages, we came down, we broke the 20, then we broke the 50, then we broke the 200. EMA came down and rested on top to the T on top of the 200 SMA. That's where it's sitting. And that SMA is still flat, basically flat. This has stopped turning flat. If this thing continues to go down, these will all turn and they will start going sharply lower. There's a lot of room to the downside. Do not be fooled. Now, let me go back up one, because if indeed this top is in, I want to show you where I have to go to put in. have to go all the way out to the weekly to put in what we're doing. I have to go out here and go to here. Yeah. There. Oh, come on. No, I didn't want that. Somehow that got changed. Sorry about that. Let me get myself together here. And I'm going to come down to this A wave. And then I'm going to go up to this right there. All right. So now I'm going to bring it all the way back down. Let's take a look at my 4-hour chart. It's really difficult because let me fix this. Bring this over to here. And bring this over to here. Come on, where is it? There. Okay. So what we got going on, these are the first levels. This is we'd be in a primary C wave down. That's our first level, our first support level on a larger scale. Right? So you're going to see this. Look at this. Now, what do I want to add to this? Let me go down to the hourly because we can start to build inside. And this is how I do it, not necessarily what everybody does. But I start to just look at, let's just consider a move from there to there, which is just the fifth wave. So these are going to show up somewhere. So just coming off, just straight fibs for the rally, we got 13,085, 13,017, then we start to break, right? And a lot of people go like, well, on this rally, it's gonna retrace 50%. Almost. It can get there, and then they're going to be looking for a rally. So that's why I include them. Now, maybe we get down to here to complete this small third wave, rally up and come back down to complete the first 5 down, either here or here. Then I start to change it all around. Then we start adding different areas. Then I can start putting in for a C wave. Then I can start putting in for a larger third wave. But right now, this is where we're going to start. These will be support levels. And I'm telling you, they're not necessarily attached to anything. They're just support fib based on this move. So the deeper it goes, the more confirmation we're getting that high sticks. Okay. And if we want to consider this a wave 4, here's your marker. It really should not go below 13,017 because wave 1 topped at 13,012. If it does, we're getting more confirmation of that high. Let's go over and take a look at the S&P. S&P is a little bit cleaner on the downside move. Once again, I put the 3 up there, looking for this, and even got some of my better clients coming and calling saying, are you sure? Isn't it 3, 4, 5? Hopefully. I said, it could be, but it counts better to put the 3 there and to leave the open that we're going to get up to 42.35 or 42.50. And we had where minor 1 to minor 5 pushed us up to 4,300. That stayed in. Right now, I want you to see that's the high, 1, 2, 3. If they don't bring it down and put in another low below 4105.50 to make it into a 5 waves down off of that high, then we're left with 3, and I'm looking for it to march itself right back higher. Same deal. Is that what I'm expecting? Not necessarily. Can it happen? Yes, it can. It's going to get very active and interesting. So, what do we have? This would have been for actually a third, fourth wave, which we got. I'm going to take that off. Let's put the first one up, which is nothing more than just retracements. So you can see we've already come in the S&P much deeper, much, much deeper. 70.5% of the rally. So that's why I should just put the B there. That's why this is very strongly telling me we're done, we're done, we're done. And I'm now looking for that to come down, but I'm not going to call it just yet because we have seen markets get really weird. And again, we got a large number going like, no, I'm not bearish, I'm bullish, and we're going higher, and this was just whatever. Fed's going to rescue everything. Fed's going to make sure that we go higher. Fed's going to do this. Fed's going to do that. I have no idea what they're all saying right this moment, but we're going to leave it open. So for tomorrow, yes, I'd be looking for continuation. I'd be looking for a drop below 4105.50. I would like to see it surrender 4,500. Now, I'm going to take this off for right now. I'm going to pull this out. I had to go all the way out to the weekly because I want to show you, yep, we got a failure in there. Not so bad as you would think. All right, so that one was, actually it says 4208 was this high. So where did we need to get above? 4196, we did. 4203, so we didn't get above that. It's a very small failure, actually. So let me go down to the daily chart, and I want to start putting in, I want my larger fibs. And those are going to be, come on, here. So we're going to go from there to there to here. Okay, so these are the fibs coming off. And look at this, right? If we're putting a primary B there, primary wave C would equal primary wave A at 2,900. And where's my support? 28 to 3,000, 2,800 to 3,000 to complete primary wave C. And when primary wave C is done, that's going to be cycle wave A, and you should get out of the way because you're going to want to buy it. You're going to want to buy it and just hold it because it's going to go ding, 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 ding. It's going to go up in a cycle B wave. If you thought this B wave was something, wait till you see the cycle, right? Each time I go up a degree, it's bigger. It's going to carry more power. It's still going to be an ABC, but maybe not as futzy as this one was. I'd be looking for it to go really have a supersized rally, a cycle degree size rally. And what will be inside? 3 waves of primary degree. So we got a lot to look forward to in terms of once this is done, but it's going to be a lot of confusion, a lot of, oh my God, what's going on coming off. But if we just keep in mind it's a correction, and just play the price action. It's going to be wild, it's going to be woolly, there's going to be a lot of confusion, there's going to be a lot of tossing around of everything. That, in my opinion, folks, is going to be called noise. And if any of you are familiar with timing research, I am doing a presentation on Thursday at 4 p.m. Eastern. And the title is that we need to really define and to work our trading rules and our mindset. And if you can put those together, you can trade no matter what's going on. It's not always going to be so clear, but I'm telling you, within this primary C wave, we're back into counting 5s, not ABC, ABC, ABC. It'll be 5. All C waves are 5. So it's impulsive. It's going to be easier to trade. So again, we should have a lot of good trading on the way down. And then when it's complete, we're turning around and going right back. We're going to go right back up. Oh, they're going to be great trading opportunities. So you may not want to miss how I work getting noise out of my purview so that I can focus on the price action. A lot of times it's not so easy. All right. So again, bringing this all the way back down, let's take a look at that hourly chart. This, I think we're much too far. So I got to try to figure out, well, what else can I put here that's going to help me on a support level? Well, I can put these things in this way, but again, I don't really have anything. So even if I take it up to the 4-hour chart, it's like, well, what else am I going to look for? I'm looking for an additional wave down in the terms of a wave 5. So 1, 2, 3, 4, fifth wave down. So how would I set that up? If that's the top of wave 4, well, maybe I can do this. So where can we look for? Well, we have 4123, high level. It's not a new low. We have 4110, still not a new low. 4100, that's a 50%. Wave 5, okay. If we just did a straight, that wave 5 should be equal to wave 1. If this is wave 1, your high is 4206.25, 4206.25. Then we're going to subtract that low, which was 4176.5. So we have 29, almost 30 points. So right there, you're looking at 4100, 29, almost 30 points. It still does not put us to a new low, but we know we have that support at 4100. We know that that was being defended and likely will continue to be defended. But we have 4089. That works. 4082, 4075. Those all work in terms of what a fifth wave can do. Okay. So the other one would be, that wave 5 would be 1.618 times the length. So then I could put that in. And we're looking at 48 points. Now we're talking. Now we're down into here. Okay, so we continue to use our fibs and we add them. But I've already put it in here so we can see what we got going on. Once we're done, 1, 2, 3, 4, 5, we should be getting confirmation. If we get 5 down on my hourly, this pretty much stays in place. Pretty much stays in place. And then we get a rally. I'm sorry to say it's going to be another wave 2. We're forever doing 1s and 2s. And then we drop into third, and then we really start to see some activity, some of this serious downside. That's where I'm going to end it for right now, folks. Big day tomorrow. Big day tomorrow. Let's take a peek on what we got coming out. Economic news. 8:15, we got the ADP employment. Well, I'm telling you, if the JOLTS did what it did today, wow. What is ADP going to tell us? Right now, the median forecast is for 133,000 new jobs, right? Previous was 145. Could be well received. We'll see. I don't know. At 9:45 Eastern, we have the S&P U.S. Services PMI. And at 10 a.m., we have the ISM Services. So those are the additional ones. Like yesterday, we got the manufacturing PMI and ISM manufacturing. Tomorrow, we get the services PMI and the ISM services. Then at 2 p.m., we get the Fed interest rate statement, their decision. So could be a great morning, even a better afternoon. Have a great evening. And the next update will be on Wednesday, May 3rd.